We all see trucks on the road every single day, right? And we probably think logistics is pretty simple. You move something from point A to point B, you send a bill, you get paid. But what if I told you that every single one of those bills kicks off this deep, complex investigation? Well, today, we're going to uncover the secret life of a logistics bill. So take a look at this. This is our main piece of evidence, a single, handwritten transport bill. I mean, it looks simple enough, doesn't it? A list of routes, some rates, a few extra charges. But trust me, this piece of paper is an absolute minefield of potential errors, disputes, and massive compliance risks.
So that brings us to the big question, right? What does it actually take to get this right? The journey from this humble piece of paper to a fully paid, compliant invoice is, well, it's way more complex than you'd probably imagine. Let's follow the clues.
Okay, our first stop is what I can only describe as a cross-examination. Before any numbers even get close to a computer system, every single detail on that bill is essentially put on trial. And I'm not talking about a quick glance. This is a full-on forensic audit. Now, what's really fascinating here is the sheer level of scrutiny. We're talking about a process where the team's motto is basically trust but verify everything. They take that bill from the transporter and they hold it up against all their own internal data to see if the story even adds up. And this is where you see just how manual this whole thing is. These aren't automated checks run by some fancy software. We're looking at handwritten notes, custom formulas scribbled on working papers, personal spreadsheets. It is a hands-on, detail-obsessed investigation from start to finish. And to solve this puzzle, the team has to assemble a whole case file of documents. The transporter's bill? That's just the start. It gets checked against the lorry dispatch challan, which is the list of what was sent, and the individual lorry receipts, which are the absolute crucial proof of delivery. And all of that gets compared with internal notes and client documents to make sure every single detail matches up perfectly. And this is where the detective work really kicks into high gear. Because, pretty often, this cross-verification uncovers a major problem. For example, a freight charge for a specific route suddenly shows up, and it's way higher than the rate that was agreed upon.
You can almost hear the discovery happen in real time. This is a direct quote from the team, right in the middle of their investigation. Shrimpor's rate is only $10,000. Why is he charging $14,000? And that one question, that one discrepancy, kicks off a whole other round of checks, phone calls, and emails to get to the bottom of it before a single rupee gets paid.
All right, next up, we dive into what is often the most complex, the most argued over part of any logistics bill. The detention charge. This is where the rules get super tricky and the cost can absolutely skyrocket if you're not paying attention. So what even is a detention charge? Well, to put it simply, it's a penalty. If a transporter's truck gets stuck waiting somewhere, either to be loaded up or to be unloaded, for longer than the free time they're allowed, they start the clock. And they start charging by the day, or sometimes even by the hour. But here's the real kicker. The rules are totally different depending on who you're dealing with. A big, established transporter, they might calculate their charges by the day, and they'll even give you the first and last days for free. But a smaller, local transporter? Oh no. They often work on a strict 24-hour clock that starts the second the truck arrives. And the rules for these local guys can be unbelievably strict. As one team member put it, even if it's 5 minutes over, he'll count it as a third day. That just shows you there is absolutely zero room for error in tracking these times. A few minutes can literally cost thousands. So, how do they figure it out for the big transporters? Well, it's this really precise four-step process. First, they have to find the exact date the truck reported to the rail yard, or the rake. Second, they find the final unloading date from the official client-stamped lorry receipts. Third, they exclude that first day and that last day. And the days left in between? Those are your billable detention days. And you can see here, the financial stakes are crystal clear. The rates are tiered. The first 2 billable days might cost you 1,000 rupees each, but from day 3, that jumps up to 1,500. And if a truck is stuck for over 2 weeks, the rate climbs even higher. Getting this calculation exactly right is absolutely crucial. So once the bill somehow survives this intense operational scrutiny, you'd think its journey's over, right? Nope, not even close. Now it has to enter the whole realm of financial and tax compliance, where every single number has serious legal consequences. So all that verified data from all that manual work is finally entered into the company's formal accounting system, which is called Tally. But this isn't just about record keeping. This data now becomes the foundation for the company's official tax filings.
And filing the Goods and Services Tax Return, or GSTR1, is a whole other meticulous, manual process. It means extracting multiple reports, making sure there are absolutely no gaps in the invoice numbers, and, this is the key part, manually correcting the data file that the system exports before it ever gets sent to the chartered accountant.
So why the manual correction? Why can't they just click export? Because, and this is from the official process document, the default file from the accounting software is often unreliable. Think about it. Standard software just isn't built to handle all the unique, negotiated rules and weird invoice series of every single business relationship. It takes a human eye to catch what the software gets wrong.
And why does all this matter so much? Well, the consequences are huge. If you get the filing right, everything flows smoothly for your clients. But a mismatch? That can trigger tax notices and government scrutiny. And if you short report what you owe, you are looking at back taxes, interest, and some really heavy penalties. The pressure to be perfect is just immense.
So after seeing this entire journey, from a scrawled note to a tax return, what's the biggest takeaway? For me, it's that the human element is what makes any of this possible.
I mean, let's just pause for a second and think about the transformation we've just seen. We started with this messy, handwritten bill just full of potential landmines. And through this incredibly detailed, human-driven process, it's been transformed into a perfectly verified 100% compliant entry in a national tax filing. It's kind of amazing.
And here is the most remarkable part of it all. This incredibly complex system, this firewall that protects the company from financial errors and legal trouble, it often comes down to the expertise and the diligence of just one person. They are the final checkpoint. They're the human processor running the most critical checks that software just can't.
In this whole process, it leaves us with a really crucial question for the future, doesn't it? In an age where everybody is talking about automation and AI, what happens to the work that still requires human intuition, critical thinking, and just pure detective skill? Because as we've seen today, sometimes the most important firewall isn't software. It's a single, diligent person paying attention.